All right, good afternoon, traders. You guys have been getting a lot of me these last couple weeks. Thank you, Jachin. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. While my trades are placed through T3 Trading Group, you should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. It's basically the same as yesterday, except I got added Chewy into the up move today. Oh, I forgot to add TQQQ. And I am also short TQQQ overnight. There it is. The updated position disclosure. I am short TQQQ. I'm out of Chewy. All right. Let's have a look. Trade Desk after hours. Trading up. TTD. Great company. Really good company. Big fan of this company. They do some good things. They're making good money. EPS beats, Rev beats, good stuff. Today was the biggest rise in the S&P 500 since November 2022. I knew it was a big up day, but I would not have expected it. The craziest part about that statistic, S&P rises the most, biggest one-day gains is November 2022. Craziest part is that it's an inside day. It was an inside day. But we'll circle back to that in a second. We got Dropbox out. What's the symbol for Dropbox? I'm losing my mind. I just typed up box, and I know that that's not Dropbox, it's box.
DBX.
Yeah, that's right. DBX. DBX up here a little bit after hours. Dropbox beats. Okay, we got Elf. Elf is trading down a little bit. Doesn't look too brutal, but they beat on net sales, beat on their adjusted EPS pretty nicely. They raised their fiscal outlook. Yeah, Elf numbers look pretty good, but they're hitting it down for whatever reason. Unity looks like Unity Software second quarter gross solutions revenue is a beat, based on what Jiachin said. We got a beat and a beat. But the CFO is leaving. Yeah, that's never great. Never great. They're like, this CFO has been telling us bad numbers that we don't like anymore. We need a new one. I mean, this stock is just pummeled to the ground. I would think, though, that even if with CFO leaving, that these numbers are so beaten up that if they're beating, that it would actually still go up. I wouldn't think that it would take much to get this stock to honestly go up on its report. Which, like, I had pretty low expectations, but that was my silver lining, was almost, how can it get worse? But it can always get worse. Especially for these companies that don't make money. Alright, let's get into the bulk of our meeting here today. Today is August 8th. What day of the week is it? Thursday? Man, I've been working too hard. Losing track of time. Alright, so S&P SPYs here up 2.3%. Apparently the biggest update since November of 2022. I said this like a week or so ago. Historically, the biggest updates occur in bad markets, in bear markets, and weaker markets. So not surprising to see that statistic, considering what we've gone through over the course of this week. The wildest part about it, like I keep saying, is that it's an inside day. The biggest update since 2022 is an inside day. That's really crazy to me. The Qs up 3.1%. The IWM up 2.4%, so we got some QQQ outperformance. But with the RSP up 2% versus the SPY's 2.3%, they cut their revenue outlook. Thank you, Bill. That'll do it. With the RSP just slightly lagging behind the SPY's, it was still a pretty good day as far as overall breadth goes for the market. We still have pretty high correlations with the VIX breakdown that we had, breakup I should say, that we had last week in the market breakdown. It really changed. That dispersion trade went out the window and correlations dramatically increased, and we'll see if that ever comes back to life. It seems like it's going to take a long time to really reset all the gamma in the market and bring the funds back into forced buying. We're a ways away from that actually happening. Unity recovering a little bit, almost back to unch. I need to just change an offer that I have out in this real quick. Just, if you guys can bear with me for one moment, I would appreciate it. Just need like 30 seconds here. Maybe 45 seconds. Changing my game plan on what I was going to do with this Unity after hours based on the initial reaction. Alright, starting to go here a little bit. We'll take it. I'll take it. I don't know if you guys will take it, but I'll take it. These earnings names, sometimes trading them can be pretty crazy. I got a partial fill, so that always takes me an extra second to adjust. Partial fills are annoying. All right. All right. All right, back to the market. Yeah, partial fills are annoying just because it takes. I don't have hotkeys for partial fills. You know, it's like I got to go in and manually change the tier size to adjust the partial fill. Is what it is. Takes a second, and you're doing it for like such small money. You know, like I got partial for 65 shares. It's like, all right, I got partial for 65 shares. Now I gotta come in on the other side and change that and buy that 65 shares back, basically. Just take some time. All right, anyway, popping back over to the market. So like I said, inside day today, but a really impressive snapback. We kind of discussed in the morning meeting today that we had very mixed signals, I felt, from a strategy perspective on the market this morning. Because on the one hand, we closed at absolute lows yesterday on a day one after creating a pivot high in the market at the ADMA, at equilibrium. Usually that's not a one-day move. When you make a pivot high in a weak market off that ADMA, especially a market environment like this one, and then you close on lows, it's usually not going to be a one-day move. If we were weak midday and then we tailed back up and there was a big tail on yesterday's candle, that would have signaled that we could hold in better or move higher, but that close on lows is usually not good. The flip side is that we closed yesterday back at extreme extension levels. Yesterday was a huge ranging day, right? All in one day, we were able to get all the way up to the ADMA on the daily chart, yet close $10 off the ADMA on the daily chart. That typically requires a multi-day move to be able to do that. But it was such a big range that we were able to accomplish it all in one trading session, which is pretty crazy. So the flip side was not only did we close at lows, but short-term tactical is also back in that green zone. So for me, it's just kind of general trading strategy rules that I have. I talk about the market extension and the way that I measure extension a lot, and then I put it into these three categories. Either you're not very extended, in which case you're better off looking to trade in the direction of the trend and the momentum, or you're in what I call no man's land, which is that mid area where, you know, you're not extended, but you're not extremely extended, so it kind of just sets you up for a not so great risk reward. It just is, it's difficult to buy, it's difficult to sell. And then you have extreme extension. And extreme extension does not necessarily mean to go the other way. In the same way that when the short-term tactical is all the way down in the green zone, it does not necessarily mean buy. What it means to me more than buy is it means don't short. So the market wasn't necessarily telling me to buy this morning, but it was definitely telling me, and this is before 8:30 and even after 8:30, but before 8:30 we were having a flattish open, we were still near yesterday's close. The market was telling me, you can't possibly short here, but do you really want to buy after a day one where we just pivoted off equilibrium and closed on lows? And the answer to that is also no. Then the 8:30 number comes out, the unemployment claim number, and it was a good number by like what, 7,000 claims or something like that. Like it was a beat by such a marginal number that it personally seemed inconsequential to me. But the fact is, we're in this nervous market environment right now. Emotions are very high. Market ranges are very high. It doesn't take a lot to move us. And a number that I thought was relatively inconsequential created a huge rip this morning, bigger than I expected. These SPYs ripped from 519 to 523 and change. We got a $4 rip in the SPYs off of the unemployment number, you know, the weekly claims. It's not like the most important number in the world, and again, it wasn't dramatically better than expectations, but in this market environment, it was enough to set us off. And we also know that we are in a market environment with this negative gamma here, and that was the one thing that I really did try to get across in the morning meeting today, that I felt like I haven't done a good enough of a job kind of going over with everybody, is from a trading strategy perspective. When you're in a positive gamma environment, especially a very heavy positive gamma environment like we had been in, it's going to be very mean reverting for the S&P intraday. Breakouts are not going to work well. Breakdowns are not going to work well. And if anything, when the market looks like it's going to break out in a heavy positive gamma environment, more times than not, it's going to be a shakeout, and you're actually probably better off looking on the other side. Or same thing with a breakdown. You think the market's about to break down? It could, so make sure you're managing your risk. But the higher probability situation is that you're just going to mean revert back up, and that you're better off like buying the shakeout to the downside. When you're in a negative gamma environment, like especially a larger negative gamma environment like we're in right now, $2 billion, what that does is it extends trends. It makes your breakouts and breakdowns work better. It makes your trend movements generally work better. And that was the one thing I tried to point out in the meeting, and we saw it play out again today. You know, we had this trend come in to the upside today on an intraday basis, and for the most part it held really well all day. And the interesting thing that we were looking for was to see if we were going to get the rollover into the close, which we didn't. But you can see it yesterday. Once we started to trend down, that trend lasted the whole way. So I know even for myself, with how this market has been this year, I've become very conditioned to like, all right, let's try to buy the extension buy. And even in this environment, I think we've overall done a pretty good job with that. Yesterday, I know I was able to come in and pinpoint a couple really good spots to take scalp trades to the long side in the Qs. I think I was 3 for 3 on that yesterday. I think I caught this bounce into equilibrium, this bounce into equilibrium, and then I very much remember this buy here because I did it with a lot of size where we caught this bounce here. So still able to be like a surgeon and kind of capture some of those counter trend moves. But looking at this, the easier, bigger, better money is actually not to come in and buy the pivot low extension trade, which again we were able to do very successfully. It actually is to short the continuation, or in today's instance, buy the continuation. Buy or sell in the direction in which the stock's already moving. And the one difference today was we saw these rollovers into the close the last several days. This is the first time we've been able to get a strong close. and that's partially been because the market on close orders have been so big. The market on close orders were almost $3 billion to sell yesterday. There were $7 billion to sell 2 days ago. And as Pat likes to talk about when he's here, there's a lot of services out there and there's money out there that is front running those MOCs. So we saw the really weak close yesterday when the MOCs actually hit. We saw the front running of those MOCs, and then the really weak close 2 days ago when the $7 billion of MOCs hit. And then today we have like a very flat, very small positive, MOC that was so small that it shouldn't have a market impact, except for the fact that possibly people have been now so conditioned to the sell side that it maybe could have helped the market uptick a little bit. But otherwise, it was a very inconsequential MOC today. So that was all part of the game plan. Was looking for this trend continuation. I did short some Qs today, but that's just because I really do want to have just a short on the books right now, because we were able to snap again all the way back to the 80 EMA, which, by the way, this probably means we're moving a little bit higher here. I mentioned at one point when we were rallying back during the day today, I was like, it's low probability, but if we are able to get above the 80 EMA and get above today's high, or yesterday's high today, meaning negate this negative Marubozu candlestick where we close at lows, it probably actually means that you're setting up for a much deeper upside correction. And then there is a potential that that deeper upside correction becomes a full-on reversal. And again, we have I'm not here to predict that a bottom's coming in. We have rules in place that can enable us to be involved for the reversal should it actually happen. For the moment, all we should be predicting is a continuation of this retracement based on today's close, and then we'll see how it plays out. So yeah, I mean, really dramatic snapback. This is a really good day for the Bulls. The Bulls needed this, I think, big time after several week closes in a row after yesterday to get us back up. We had stabilization abroad. By abroad, I mean with the Japan situation. EWJ, also an inside day, very boring. FXY, your yen ETF, stable. The dollar, relatively stable, a little bit stronger today. I think it was more just the stabilization than anything else that was able to help give this market some confidence to continue. And as much as I thought that unemployment number this morning was inconsequential, it was enough to get the market to move higher. And in this type of an environment, all you need is some sort of a trigger that is enough to get the market to move higher, and then you can get the follow through, and that's exactly what we got. So we'll see if that continues through into tomorrow's session. But based on how we close today, I would expect that we get a deeper correction. And that was also something I said during the day today was, at this point, I wouldn't be surprised, even if we're going to stay weak, where if we almost similar to my call out back here on August 1st, where, and this was actually, I was so correct on this that it was actually a mistake for me. Originally, I wanted to start shorting at 465, and I was like, I think that they're going to push this correction further to the upside than people expect, because that will mess with positioning a little bit. I'll start getting people a little bit more optimistic, and then the rug pull comes, your higher pivot high comes in, and then you can actually work lower. And that was exactly what happened in that circumstance. We didn't pivot back down at 465. We didn't pivot down at the 80 EMA. We pivoted down after a piercing of the 21 EMA that led to this brutal 3-day move lower. You could definitely see a similar situation here where we continue to bounce until we hit a point where the people who panicked and sold this low are freaking out, and even the people who didn't buy, because they were like, you know what? Have a great night, Billy. Because they were like, you know what? I'm a little bit nervous, but I'm not gonna sell, but I'm also not gonna buy. At a certain point, they'll be like, I've already seen some people even doing this. They'll start going, oh my God, I can't believe I didn't buy when the VIX was at 65, and the Qs got down to 425 on this really big dip, and then they start kicking themselves. They think that they have the all clear sign. They start buying at QQQ 455 instead of QQQ 425. You get that further push that comes from those come lately type of folks that maybe gets even into these 460s, and then we'll see, all right, do we actually maintain this downtrend line that's beginning to build out, keeping in mind as well that we still are in a period of time here of weak seasonality. We still are in a period of time here where there is a lot of forced selling flow for the market. That forced selling flow is not done based on any of the metrics I've seen. It's a good sign that they were able to wash out just how long and how leveraged long this market was. It's like if you were looking at those CTA numbers or vol numbers from those funds, they're all like, we're long at the 99th percentile. None of that's long at the 99th percentile anymore. But we also honestly haven't hit a situation where positioning is washed. Positioning was washed at the end of October last year. And this is like one of the best calls in some ways I feel like I've ever had in my career, and it was one of the most profitable calls I ever had in my career. When I got back from the vacation that I was on in October at the end of the month and saw the positioning and sentiment data, I said, all right, everybody, I'm buying. I know that the technicals don't look good, but the data that I'm looking at, I'm actually buying with both hands and both feet here, and led to that huge move. We are not washed out, even with this down move that we just had, anywhere near the way that we were washed out back to last October. And this, on a percentage pullback, was slow, but it was also much deeper than this pullback that we just had, which was much faster because of the VIX and everything else, but has only been not even quite 10%, not even quite a full official market correction at this point. So that's kind of where we're at. Trying to think if I have anything else to say about it. That's really just where my expectations are. Yeah, we're not fully washed out. I think that there's still sell flows out there. I'm not big picture bullish. I'm just tactically bullish. I've been tactically bullish really since Monday. Yesterday was a day to take some risk off as we got towards that ADMA and potentially begin to put some shorts on, which we did, right? We were shorting Qs yesterday, taking some longs off, and now today's price action is impressive enough that it makes me believe, great to meet you, that makes me believe that we can actually get some follow through here to the upside. So that's where we're at, guys. That's where we're at, guys and gals. Just been very, very market focused. This has become an interesting, exciting environment, obviously. From a trading perspective, I really didn't do anything new today. I lost a little bit of money on this WENA, which was like one of your crazy high-flying names. That's pretty much it. You know, I got out of my Chewy position to the upside. I reduced a lot in PayPal. I reduced a lot in Roku. I reduced a lot in Reddit. So I was able to take a good amount of upside exposure off into this up move, and again started to slowly short some Qs. Because I'm still realizing that I made a big mistake here, and the mistake was I was not heavy enough to the short side because my execution was actually too good that I didn't have enough size, because I waited too long and started small, when in reality, if I had started to short those Qs where I originally planned at 465, I never would have been in trouble on my short at 475 because I had enough long exposure, but I would have had enough short exposure from a $10 build-in that it would have protected me a lot better. And then by the time Friday came around, I remember Bill here in the VTF asking me if I was going to try to get some protection for over the weekend, and I felt that it was too late, that I was chasing protection, and obviously then that kind of left me a little bit with my pants down on Monday morning, and you don't want to be in that position. But luckily enough, I was in a spot where I said to myself, not only am I not selling, even though I'm in a really bad spot here from a P&L perspective because I'm unhedged entirely into this down move and have longs on, I'm adding the heck out of stock, and it led to Monday of this week being the biggest upside P&L swing I've ever had in my career. Granted, it started from a pretty scary number also, but was able to kind of do it right off of that. So again, that's where we're at. That's my updates on my end. It's pretty much all I've got. I am happy to answer any questions that you guys may have. Oh, is Sound SOUN have earnings? Interesting. This thing's ticking a little bit, up 27%. Scrolling up here in the VTF, not seeing anything initially. Scrolling down. Tate on Unity. So many headwinds in the space, from developer layoffs to studio closings, that you will probably see lower before a pivot. Yeah, man, it's been a brutal move for that thing, though. They need to make money. They need to show us a plan for how they're going to be profitable. Yeah, it was really tough, Tate. Tate saying I had to take some risk off yesterday into the close, because 8 out of 10 times we'd probably see lower. And honestly, without that number, we would have. I'm still uncertain, honestly. I felt today was going to be more of a consolidation day, even prior to that 830 number, which it's hard to have a consolidation day in this macro environment right now. But it's also hard to get like significant downside follow through when short-term tacticals in the green and you're $10 plus extended. If we could have gone lower today, the way that we probably would have gone lower would have been to range out, probably a big range, but mainly to range out for the first, till like 1, 2 o'clock to satisfy the short-term tactical, and then roll over into the close. That probably would have been the way that the price action worked if we got the day 2 to the downside. You work off some of that extension for the full first half of the day, and then you roll down. And so that's why I was even thinking at the open, I was like, again, before the number hit, my thought process was, well, I want to see if maybe I got the mixed signals here, but maybe that means I can snipe out some longs in the beginning of the day, but not be too greedy with them, and then see if we roll over in the close. But then, like you said, the way that the number moved the market was a game changer, and then you combine it just with the profile of the market structure right now with the heavy negative gamma, and then you can get the trend continuation higher throughout the day. From Cameron, do you have any tips to shake off a losing trade when it would have ended up working out? Don't mean to laugh, but been there too many times. T-Triple-Q, I bought it right before the low of the day, but I got stopped out for my risk. So the first thing that you want to do is that you want to make sure that your execution was appropriate and that your stop was appropriate, which maybe it was. If you bought off the 945 bar and put your stop at the low of the 945 bar and you got shaken out, I'd be very fine with that trade. We're pulling back. It looks like it's the 4th bar here into equilibrium. Market's attempting to create a pivot, it looks like, and you buy it, and then the next bar here, the 950 bar, you get shaken out. Though personally, it wasn't until the 950 bar that I actually called out the long. So if you bought when I called it out, then if you happen to buy in that 950 bar, you bought after I called it out, you should not have gotten shaken out. You should have been able to maintain the position, and it means that you had the wrong stop loss. So the first thing I would say is just make sure that you had an appropriate trade execution and game plan. I'm a little bit concerned, and I may be right, I may be wrong. You can assess for yourself based on what you're saying here. I got stopped out for risk. You want to make sure that you're not placing a stop loss based on the amount of money that you feel comfortable losing. Okay. You want to make sure that you are putting your stop loss out based on what the market's telling you, based on what the chart is actually telling you, which means seize the pivot low. But again, if you use the 945 bar pivot low, you get stopped out of the 950 bar. It's just very unfortunate. It sucks. But that happens to all of us. It happens to all of us. When you work in a game of probabilities, the thing is that anything that can happen will happen, given a great enough set of opportunities. And outlier events happen all the time. Shakeout events happen all the time. So it's definitely a really hard thing. You just got to learn to be comfortable with it. The way that you learn to be comfortable with it is you ask yourself if your game plan was sound, and if your game. What we all have to realize, and I say this all the time, and it's so hard in the moment, is that if your game plan is sound, then nothing else matters. The result of the trade never matters. The result of any trade that you take never matters. All that matters is the process that went into the trade. If the process is sound, the result doesn't matter, because you will get every result. You'll get shakeouts, you get trades that fail, you get trades that work, you get trades that work a little bit and then fail, you get trades that work phenomenally well, you get trades where you bought the absolute top and it instantly goes down and stops you out. Thanks, Tate. You need to recognize that all of those possible situations that can happen will happen, and if you followed a sound game plan, it means that you're going to make money in the long run. So if you can recognize that and take solace in it, then it shouldn't lead to you being a bad actor on other trades. It should lead to you doing the right things on other trades consistently over time. And I get it. We all can get in our heads. There's different things that where I get in my own head. This happens to all of us. The thing that I always tell myself, and the thing that I talk to the traders here on the team about a lot, is it's okay to have a bad day. It's okay to make mistakes. It's okay to get emotional, but you can't do it again the next day. You can't bring it back with you again the next day. So whenever I have a bad day, I repeat to myself the next morning like a mantra. All I need to do today to be successful is to do the right things consistently over time. And then if I can do that, then I know that I will be consistently profitable in the long run. So that's the goal. You have to learn, and this is the thing that probably took me longest out of almost anything in my trading career, was to learn to just not care about P&L. It's very, very hard to do that, right? It's your money, it's moving. We all have a natural emotional attachment to money. You have to learn that the P&L truly, truly does not matter, and it takes a long time. Is Bill giving me a follow-up? Bill saying, yeah, did you make the right choices or not? Because it's probability. So just like you can get pocket aces in poker, it still doesn't mean that you win every time you have it. Having said that, when it happens to me, I don't watch it and don't keep checking on how much I would have made. Yeah. I normally can stop myself while doing the mental math on missed gains. Yeah, you have to. It's hard for me sometimes because I'd sometimes have multiple trades in the same ticker, basically, and then you can't not watch the symbol because you still have to manage like the other trades in the same symbol that you have ongoing. But for me, I took a loss in WENA today. Just like a day trade on a crazy name, and I stopped myself out, and the loss was slightly bigger than it should have been. And it was one of those things. I knew I was just dead wrong. I knew even when I was in the trade that I was dead wrong. But as I also talk about, buy the ticket, take the ride. You have a game plan for the trade, stick with it. So there was a time I could have gotten out of that trade for break even, and I was like, I don't do that. So I continued to trade the trade, and then I got stopped out, and the stop loss was a little bit bigger than it probably should have been. And I wanted to continue to have it on my screen. I just took it off. There are some massive bids in the tape in this in Unity right now that I wonder are real. They have stacked out 200,000 share bids on NASDAQ. 51 cents, 44 cents, 35 cents, 33 cents, 20 cents, 05, 14 even, and 13.95. It's very weird. Yeah, thanks, Nick. Appreciate you. How long did it take me to not care about the P&L? Probably 8 years, something like that. 8 years of trading before I can say that I really hit the point where the P&L, and even then it's not 100%, and I still get variations of being a little happier or a little bit unhappy when my P&L is good versus being bad. I definitely still get like a degree of that, but I would say that broadly, like, again, I am going to choose to be very proud of myself for Monday, not only because I made all the right calls and because I was so gung-ho to everybody here on the team when I was doing the morning meeting about the importance of buying, but you guys may not have realized that when I was doing that morning meeting on Monday, I was down more P&L than I've ever been in my entire career. And I didn't let it affect me at all. I came in, I did the right things based on what I knew the right things were to do that day, and I made it all back. It was, like I said, it was the most I've ever been down. It was the biggest P&L upswing I've ever had in my career. All on the same down Monday. It was wild. It's been a wild week. It's been a wild couple of weeks. And again, it just did not affect me. I don't think at other points in my career I probably would have been in tears over the amount of money that I was down. Though, my overall swings and everything have obviously gotten much bigger over the years also. I missed another question I think you put up, Vikas. Let me scroll up and find it. What signs besides price action are you looking at for a turn down? Really just price action. Really just price action. The price action is where I will find the signs that we potentially turn down. The thesis that we will turn down is a separate thing. The thesis that we will turn down is just based still to some degree off technicals, but also just based on the understanding of the market dynamics and the fund flows, which for me personally over the course of the years, that was never something I incorporated into my trading. And, really big shout out. Pat's not here, but we can give a big shout out to Pat even while he's on vacation in Las Vegas. Pat was really the first person to put me on to some of that stuff. I remember being in the office with him in 2018 or something, and him saying to me, I'm really trying to learn about this gamma stuff in the market. And, by that point I had been in the business long enough where it's like, I still feel this way. I've heard everything. I've heard everything from everybody under the sun. And because I've heard everything from everybody, I'm naturally a little bit skeptical on new stuff, especially because I've, spent years developing a trading edge that works for me. I'm naturally a little bit skeptical on new stuff. I think there's a lot of woo-woo stuff out there. I'm not a believer in, sorry to my good friend Diego, who's not listening today. I am not a believer in, the Jupiter, sunrise is going to create a weak market because of the emotional well-being that it has on people. I'm not a believer in that. Though, with that said, there is a statistic that shows that markets overall perform better on sunny days than they do on rainy days. That is a historical statistic. So, who knows? Maybe there is, something to it. But I'm always naturally a little bit skeptical, but I also do love to learn, and I'm very open-minded. The one thing I've also learned over the years is that there's so many ways you can make money in the business, and you should be open-minded to any of them. Yeah, you too. Thank you. So, in 2018, Pat started being like, hey, I've started to learn about this, gamma stuff that I'm learning about, and, it's really interesting, he almost said, do you mind if I start kind of updating you on this a little bit? It's really interesting. And I was like, yeah, sure, whatever, Pat, no problem. But it really turned out that he was onto something, and I've just learned more and more and more of it over the course of the last 6 years. And then, our team has improved, and Bill K here has been a big influence on, honestly, having me learn a lot more. So, thank you, Bill, for helping me with it also. And now it's at a point, you fast forward from 2018 to when I was first even learning some of these terms to 2024 over the course of the last 6 years. And it's just become a massively important part of my process. It's been incredible how consistently the last few years our team has been able to nail the big picture macro because of a study of flow and funds and stuff like that, and to some degree sentiment. We have it's been mind-blowing, honestly. I've never been able to do that to this degree of success prior to implementing this sort of information into my trading process, where we've been able to nail like every single major pivot high and low for the last couple years. And look, we're gonna miss one in the future, I promise. But even this, you know, we started. We said in the end of June. I still remember. I have a little bit of an ego. I used to be a professional fighter, so I have a little bit of an ego. And when I did that thing with Scott Redler and David Prince, and I started talking about like kind of my thesis for the market, and I was like, I really expect that we're going to be very strong here in the beginning of July because there's a lot of forced money that has to come in the beginning of the year. But then I think when we come into earnings season, that these big tech companies are going to disappoint. And then a combination of that new money coming in and tech disappointing because of the AI spend will create a big rotational trade. Like there was something along those lines. And Scott was like, we're not on CNBC here. We don't have to make like the big prognostications. And I get that. I actually totally get that, because I hate, like, one of the things I hate more than anything is how on CNBC at the beginning of the year, every year, they play this game where they're like, I think at the end, their end of the year target game, right? And I think it's just the biggest waste of an exercise. But I do think that you can develop a thesis for your expectations over the course of the next couple of months based off of data. And we get the data, honestly, from people that are smarter than us or who have better models than us, but we can utilize it. And what the data said was everything that played out. And that's how we were able to say it in the beginning of June. Expect a strong first 2 weeks. Expect that maybe we can get the rotation to come into play if some of the money that comes in actually goes into more like the IWM names. And the timing on that call wasn't perfect, but it obviously worked out really well. We had that explosion higher in the IWM. And then the next part of the thesis was the AI spend might be too much on big cap, which could be the next thing that further escalates the selling of this heavily over-positioned, overbought area of the market. And then guess what? That's exactly what happened. And then we said, hey, as we get through this July options expiration period, we are actually going from the market being the highest positive gamma that it's ever been to much closer to zero, which can increase the range of outcomes. So if you already have selling that's coming into the market because of Mag 7 earnings names disappointing on their reports, and they don't even have to disappoint. They could even be good earnings that aren't good enough, but the market decides it doesn't like the capex. And you don't have the S&P insulated in the same way from the gamma. That could create this big selling. And obviously we saw it happen in July. And then we come into August, even before August begins, and we're like, well, historically, August sees outflows, and Goldman is modeling more outflows for August. This is going to be a difficult month. Now, I didn't predict that we were going to have an implosion from a yen carry trade that leads to a positioning blow up, even though we were saying the positioning risk is to the downside. If selling comes in, selling can lead to more selling. You always need a trigger. You don't always know what the trigger is going to be, and a lot of times the trigger doesn't show. But when the trigger shows at the right time, when you can combine like a market trigger, which just happened to be the I'll talk to you.
Contact on the phone.
Yeah, I'll talk to you. Which just happened to be in this case, like the trigger was this yen carry trade happening from overnight, but it happened to coincide with an environment where the gamma had already gone to zero and been pushing to negative, and we understand what that means. That's the recipe that creates this move. And then we combine that, this leads up to where we are today, we combine that with our understanding of extension. And that created the big buy call out from Monday. And then it's also combining technical analysis. I understand how technical analysis works, where most likely when you can get a retracement of a move like yesterday, today, and close on highs, that this is also just his experience of seeing this play out before. You push this move high enough most of the time to drag more people in. and then we'll see if the actual pivot high actually comes in, because we still are in a period of time right now where there are a lot of headwinds in this market. We know that there is still forced flow. I just talked about how the market's not washed, though positioning has come down dramatically, but it came down from 99th percentile to 40th percentile or something. That's not washed. It's not where we were last October. I don't remember the numbers where we were last October, but I know it was much more washed than this. Where, you know, and August here is still a weak period of time, so is the beginning of September, where I don't think that it's necessarily all sunshine and rainbows ahead. So the point, I guess, Vikas, and I'm doing a long-winded answer, is that, you know, what signals am I looking for the pivots? It's always a combination of, for me now, at least at this point in time, understanding the market dynamics of the environment that we are in currently, combined with an understanding of technical analysis and how the technical analysis actually works. Because that's how you knew, I mean, you never know anything, but that's how you knew, I thought, as much as possible on Monday, that even though there still is a big selling dynamic out there, that degree of extension, you have to buy that. And sure, there will be the time where if that idea fails, and every circumstance is unique, you know, you get a COVID situation, or, you know, some new virus appearing, or a nuclear bomb that goes off, then the amount of extension that we had on Monday is not going to be enough. But I still think that the best chart I saw, and I think Bill posted it on Tuesday morning, was the chart of all the VIX spikes. And it was like, you know, long-term capital management blow up, here's the VIX spike. You know, financial crisis, here's like the VIX spike. Volmageddon, here's the VIX spike. COVID, here's the VIX spike. And then that was the best chart ever, Bill. I hope you have that chart somewhere. I was actually wanting to, I was having a conversation with someone like who's not even in finance, and I wanted to show them that chart because I thought it was just so awesome. And then this VIX spike just says like 100,000 shares, less jobs. It was like it was great. The chart was fantastic. So yeah, Vikas, long-winded answer to your question, but I hope I covered it as best as I could. From David L. I normally take heavy losses on uptrend days, so trading small and sat on my hands most of the day. Was tempted to short each of the pullbacks, especially towards the end of the day, but the gamma environment comment helped keep things in check. Nothing really confirmed a short for follow through today. Cool. Sounds like you got a case of Josh-itis. Who's wanted to short. I get it though. You know, we have our trading biases. When I was a new trader, actually, my bias was always more to the short side also initially, and now my tendency is definitely more to the long side. But it's cool that we have a good team with different people with different thought processes, because I do feel like, you know, to some degree, Josh and I can balance each other out a little bit, where I tend to be sometimes overly optimistic, overly looking for the long trade, and I think Josh even admitted in the afternoon meeting he did the other day that he tends to be the literal opposite. So we balance each other out a little bit, and then if we both find ourselves agreeing, a lot of times that's when the magic happens. Yeah, Cameron, you this is your first week, man. You started in I think that this type of environment is actually phenomenal for people who are experienced. I bet that this type of environment, I think, is actually very difficult for someone who's very new, because the movements are so fast and furious that it's difficult. Thank you, Gilbert. Yeah. I think you guys still sometimes get a little bit of a taste sometimes of my mood, which is sometimes, but not always, a little bit related to my P&L. It still will make me a little bit happy or a little bit unhappy, but I very, very rarely at this point, very rarely, I still won't say never, but very, very rarely will have it actually impact the way that I trade. Bill saying option flow is much larger these last couple of years. The tail's wagging the dog. Yeah, I would also say that as my education towards market structure has increased over the last 6 years, I'm not going to say it wasn't important before that. I'm sure it was, but it seems to me, based on everything I read, that it's become increasingly important, and a lot of that has to do with the increase in derivatives trading overall. Yeah, for sure. A lot of it, what Bill also just said here, is just continuing to read it and continuing to read it, because I can tell you the difference between when Pat first started doing his note. I forget when that happened. I think he started doing it a little bit before COVID. I think he first started doing his note a little bit before COVID, but it was as he was starting to learn a lot of the market structure stuff. So that's in turn when I was first starting to read and learn a lot of the market structure stuff. And there was a lot of times, even still sometimes, where I'm reading Pat's note or I'm reading some other research report, and I don't know what they're talking about, or at least don't fully comprehend and understand what they're talking about. But I can tell you that just from reading Pat's note every day for 4, 5, 6 years, whatever it is now, that's what has increased my knowledge more than anything. That plus, doing what Bill is saying, where as much as time allows, when I find a concept that I feel like I don't fully grasp, researching that concept. Which, if it's your first week trading and you're trying to read Pat's note, that might be the entire note that you don't understand. And it might take you a full week of research to get through, just Google searching terms and language of just one note to start to put together the concepts. It takes a lot of time. It really does. It takes a lot of time. But everything with trading takes a lot of time. The whole process of building out your edge takes a lot of time. Good stuff, David. From Rich, feeling a little guilty about not holding 25 to 33% of my position in the Qs and NVIDIA longs off the bottom. Yeah, we had a great call out today. That was actually the call out of the day. Was the call out of the long at 9:50 today. It is what it is, Rich. You followed your game plan, so. Yep, you followed your game plan, so that's all you can do. Oh man, that SVB morning was really bad. I was down more on Monday morning than I was on SVB, which was a 6-figure loss when that happened. So the SVB was worse because, first of all, Monday I didn't realize those losses. I not only realized them, but I, made money based on doing the right things that day. Whereas the SVB, I think that was a Friday, it was halted and I was helpless. And didn't know what was going to happen. I couldn't fight, I couldn't trade my way out of it, I couldn't do anything. They just halted the position when I had a long position on where I was scalping a trade pre-market on that Friday, and they should never have allowed that thing to be open pre-market on that Friday. If they were going to halt that thing, like a permanent halt on that thing, it should not have been allowed to trade even pre-market. It should never even have opened at all in any way that day. But they halted it at like 8:45 a.m. or something like that day. I have a scalp trade on where I think I'm risking a couple $1,000s or something, even less. And I was like 5 cents away from an offer to take a bunch of stock off when they halted it. So I didn't even get the offer filled, and then they never reopened the position. I sold it on the pink sheets for at 15 cents or something like that, and just took a 6-figure loss. That one was worse. That was devastating. That was really bad. That sucked. And still, if anyone who was still on the team with that day remembers, I was obviously upset, but I think I still gave us our normal meetings and, pushed through. Yeah, thanks, Bill. Cool. Over on the YouTube, from from Cyril. I took the cues long on the EMA bounce, but I closed it too early on the opening price retracement. I need to improve my trailing rules and let the trade play out for bigger swings. How much to keep to run? Well, how much you should keep to run depends on the game plan that you create for the trade ahead of time. How much do you want to take off quickly versus how much do you want to trail? And the answer to how you develop that game plan should be based on a couple of things, but one of the things that it should be based on is your expectations for the trade, based on the big picture technicals. What do you think you can get as far as follow through on the big picture technicals? And for me, I think, for the people in the VTF, the morning meeting today where I was talking about that we can get a lot more follow through on trades because of the environment, hopefully help people to be able to hold a little bit better also. So that could also have been something that was in the back of your head to give you maybe a little bit more of a greedy game plan for a little bit of a bigger hold. So hope that helps a little bit, Cyril, but definitely depends. Sometimes you might want to be trailing 50% of your position. Sometimes you might be wanting to trail 10% of your position. I think it depends on those other circumstances. No problem. All right, just after 5 o'clock Eastern Time. Thanks, Tate. I appreciate it. Appreciate it. I do. All right, so just after 5 o'clock, I'm going to wrap things up there. Have a great night, everybody. I will see you all tomorrow.